When are things finally going to start to turn around for Alibaba? That's a question that we are going to be discussing in this video here today. And whether you like it or not, one of the things that plays a key role in the success of this stock is the relationship between the US and China. So we will discuss that as well as the general economy within China. This has been another big area of concern for investors because we've seen a lot of weakness throughout China over the last couple of years. And on top of all of that, we are going to take a look at Alibaba's upcoming earnings announcement. They are set to announce the earnings here in a few weeks. So we're going to take a look at analyst expectations, what we can anticipate from Alibaba's numbers, and most importantly, what to watch out for in this earnings announcement that could potentially send the stock higher. And as always, thank you guys so much again for the continued support. If you want to know the best way to support the channel, it is by going down below on the video and hitting the like button. It really helps promote it out there, and that helps grow the channel in a massive way. And if while you're down there, you have not yet subscribed and you like this type of content, make sure to hit the subscribe button. And if you're not familiar with the channel, one thing that I like to do is I want to make sure that I am as transparent as possible with you guys. I know there are so many channels out there where it's very difficult to tell whether people are buying, if they own the stock, if they have certain biases towards the company that they're talking about. And I want to make sure that I am as transparent as possible with you guys about anything like that so you can fully grasp the situation and where I'm coming from when I'm talking about companies. So this is the YouTube portfolio. The current value of the portfolio is $59,477.21. And the company that we're going to be talking about today, I do hold in this portfolio as well as another portfolio. This is my smaller portfolio. So the position here is only 15 shares of Alibaba for a current market value just under $1,300. In my other portfolio, my position is a lot closer to $20,000. So again, full transparency, I do hold shares of Alibaba. I also have Google in this portfolio, Apple, Microsoft, Palantir, PayPal, SoFi, Super Microcomputer, and Visa. And our two newest positions in the portfolio are Super Microcomputer, which we started adding a couple weeks ago. The current market value is sitting at $5,000, and we are now in the green on this position, up 1.73%. We also added Google around 6 months ago. That is our second newest position, and we are up 17.5%. And then on top of that, we have two dividend ETFs, SCHD and VYM. I still haven't sold out of any SCHD. At some point in 2025, I hope to, but right now there's really no reason because I have $15,000 in cash. So if we see any sort of dip in the market, I have plenty of money to deploy into the market. If I need to get more, that's probably where I would end up liquidating SCHD. However, the company that we're going to be talking about today is Alibaba. Its 52-week high was back in October, where the stock price reached around $117 per share. That had a lot to do with stimulus announcements throughout China. However, from that point till now, the stock has fallen by over 25%. But that drop in the stock price is nothing compared to what we have seen over the last 5 years. The stock in the last 5 years is down by almost 60%, and from its all-time highs achieved in October of 2020, when the stock hit $310 per share, it is now down around 70%. And of course, there are a number of different reasons why Alibaba's stock price has fallen this much. A few years ago, we saw the Chinese government cracking down on tech businesses within the country, saying that a lot of them were monopolies. And this resulted in them rolling out fines against these companies, and one of those, of course, was Alibaba. This hit the stock price in a major way, and there was this feud kind of back and forth for a number of years between the Chinese government and companies within the country. We also saw the potential of delisting of Chinese stocks from US stock markets. This was a concern because the Chinese government was not letting auditors into the country to actually audit the books of a lot of these companies. And then finally, and most recently, we have seen a lot of weakness in China's economy. We can see from the Chinese S&P 500, it has gone from a value of around $4,100 down to around $2,500 as of today. However, today there is a lot more optimism around the Chinese economy than there was a year ago, and this has primarily been driven by the announcement of stimulus in the economy. This happened around the September and October time period and sent stocks up in a major way. And over the past year now, the Chinese stock market is up around 23%. And the rolling out of these new stimulus measures already appear to be having an effect on the Chinese economy, because in the fourth quarter of last year, they grew their GDP by 5.4%, beating market expectations. Analysts were expecting growth of 5% in the fourth quarter. But the more important thing is this actually turns around a negative trend for the country, because in the first quarter of last year, they put up 5.3% growth in terms of GDP. That fell to 4.7% in the second quarter and then 4.6% in the third quarter. So what that means is now month over month, they have actually increased their GDP growth by 0.8%. And hopefully this is really just the start of this growth trend for China, because in late September, when they announced their stimulus package, they actually presented it as a 5-year deal worth $1.4 trillion. That means we are just starting to see the impact from this, and there is going to be more stimulus over the next 3 to 4 years that will have big impacts in the country. However, one thing that could have a major impact on Chinese growth is a trade war with the US. We have obviously heard a number of different conversations about this topic, and this has been a big topic of the presidential campaign. Now, with Donald Trump taking office, there are question marks around what this will actually look like, and hopefully those can get answered here over the next month or so. We obviously saw throughout the campaign trail this talk of around a 60% tariff on Chinese goods. However, there has already been discussion that that may only be a 10% tariff, but that doesn't eliminate all of the issues in China. They are still seeing very high youth unemployment. They have seen a number of different issues in terms of their property sector and the crisis that is going on there within the country. And then finally, another big one is just general demand in the country has been very low. We have seen a lot of Chinese people actually increasing their savings rate because they are concerned with the economy and they're just not spending money. And overall, this has caused a deflationary environment throughout China. And all of these different factors have a huge impact on Alibaba and their numbers. Right now, they are expected to announce their earnings on February 5th. And right now, analysts are expecting EPS numbers to come in around $2.71. The low expectation is $2.39 and the high expectation is $3.15. This compares to a year ago when they put up $2.61 of EPS. So obviously that wouldn't be incredible EPS growth year over year, but it is still growth, and that is really, again, just with the beginning effects of stimulus in the country. In terms of their top line, revenue estimates are $38.3 billion. This is around 7% growth year over year. And honestly, if Alibaba comes through and puts up $38.3 billion of revenue in a single quarter, that is a very solid quarter. The last time we saw that was back in 2021 when they put up $38.06 billion in the fourth quarter. The fourth quarter consistently tends to be their best quarter, so it's good to see that continuing. However, the one kind of bad thing is we want to see growth get into the double digits. If it still comes in around 7%, that is a little bit weak for the numbers that we saw prior to 2020 and 2021 when they were growing their top line by around 30%. But the other thing to keep in mind is they are still maintaining these high revenue numbers. We can see that the trailing 12-month revenue over the last 2.5 years has basically sat around this $130 billion, despite the economy in China being in a very weak position. But the way that they have been able to maintain these higher revenue numbers is by giving up a little bit on the bottom line. We can see that back in 2019, even through 2021, they were sitting at EPS numbers for the trailing 12-month period of around $8 to $9 per share. However, today that has dropped by almost half to $4.97. And honestly, in my opinion, what investors are going to be paying attention to in this upcoming earnings announcement is EPS numbers. I think they want to see the company get back to profitable growth where they can grow their top line while still continuing to grow their bottom line. The second thing that investors are going to be paying attention to is what they are looking at in terms of the Chinese economy. If Alibaba comes through and provides very strong guidance around where the Chinese economy is headed over the next 6 months, that is going to be huge for the stock, because that I think could help bring up valuations. And right now, Alibaba is trading at a rock bottom valuation. The forward P ratio is sitting at 8.87. For comparison, the US S&P 500 is trading around a 22 forward P ratio. The NASDAQ is trading around a 25 forward P ratio. So that means that Alibaba is trading at less than half the valuation of comparable US companies. companies. And if we look at Alibaba and we say it's a Chinese company, so it deserves a $2 to $5 discount in terms of valuation, that would result in a forward P ratio for the company of anywhere from 15 to 20, which would create a price target of $146 to $194 per share, which would be an upside of anywhere from 70 to 125% compared to the current stock price of $86 per share. And really, that is why I own shares of Alibaba. When you look at the valuation, it makes no sense to me. I don't see China indefinitely trading below a 10 forward P ratio. I think an easy, achievable PE ratio would be between a 15 and 20. I think a comparable PE ratio between a 20 and 25 would be also acceptable for Alibaba. I think when you start getting into that 25 to 30 range, that's where the valuation gets a little bit stretched, because again, there are certain risks that come along with investing in China. And that's why I always leave off my videos by talking about doing your own research. It is very important to understand those risks and the ins and outs of what they mean for a company. If you don't fully understand those, you really shouldn't be investing into a company, especially like Alibaba, that has these political risks. So don't buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. Thank you guys again so much for the continued support. If you enjoyed this video, drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. It's the middle of winter and I am starting to really miss spring and look forward to that season. So we have a spring joke here for you guys. When is the best time to buy a trampoline? Check the comments down below for the answer. Thanks for watching.